Awesome. Yeah, love it. Booker man, you want to give us your take on, what do you do when you point people in this space? They're first kind of interested and they want to start, getting into the cycle, and where do you point them and what do you tell them first?
I love it. I love so much what Taskmaster said, and I agree with it so much. So usually in my experience, when someone asks me, because they know I've been in crypto for a while, they ask me, I want to get into crypto. What should I do? Usually I just tell them don't, because at that point, when people are asking to get into crypto, that's usually when CNN and Fox News and everything is talking about crypto. And it's a horrible time to enter at times like that. So my first advice is always just don't. Because and it's because the timing of when they ask. Getting a little more broad than that. The big thing is, and I think what do your own research means in the crypto community is it's kind of a way of telling people how to look at projects and things with logic and reason and not greed and emotion. I believe that is what do your own research really goes down to is, hey, look into a project and just don't act on emotion and don't act on greed. Because a lot of the projects people want to get into are offering, 600% APR or whatever. A lot of it is, oh, I'll put $20 in and I'll be a millionaire by the end of the year. So when you do your own research, you're using logic and reasoning and you're removing emotional attachment from it. When everyone's talking about crypto, that is not the time to enter. When no one's talking about crypto, or just a few people are, that's the time when you want to use logic and reason, look into the projects that you are interested in, and ask yourself, what value does this bring? So a lot of people talk about value and what it really comes down to is what is its use and why would people want to use it? What problem does it solve? I've heard this so often in my early days of crypto is it needs to solve a problem. If there isn't a problem that's being solved, then why do it? Why use it? What's the long term of it? So I would always tell people if they ask me, don't get in. If usually at that point, just look into it, think about it, research it, maybe even head down Taskmaster's avenue of building value on the chain that you want to be on to then gain some assets on that chain.
Yeah, I love that. I think that really does play well with what Taskmaster talks about, which is, get in and maybe earn a little bit, or at least start using the technology as opposed to just jumping in. I see we got two hands up. Bitcoin man, welcome to the stage. Do you want to give us your take on where you lead people?
Yeah, yeah. So first of all, before I get started, I just wanted to say, damn, Taskmaster's always on the frickin' money. Holy. And yeah, so I totally agree. So, and just the same thing Bookerman was saying. So for me, when people ask, oh, how to invest in this and that, most of the time, I'm like, I try to explain it, but the short answer is don't, because most people are not cut out for it. But there is a caveat, and that is Taskmaster also mentioned that, and that's earning it. There's a lot of different ways to earn it. Like Hive is a big way, like the biggest really, but there's other ways that you can earn and get into the space without investing. For instance, I can tell you the person that got me into the space, he didn't invest a dime. He made a video for a coin called IO coin or whatever. They gave him some equity in that like with that coin. He just staked it, and then price went up. He sold some of that, got lucky, bought some other coins that did well, and and then he's well off. And what did he put in? Just blood, sweat, and tears, not a dime. So that's really where it's at. It just so investing is not for anyone, and that goes for crypto or anything. So because most people, they don't have the capacity or the discipline to, and even if you do, like, if you don't have the right guidance, you're gonna make mistakes, and that's part of the education. Uh, but yeah, that's all I want to say. Great meet so far, guys.
Yeah, thanks. I agree that Taskmaster is firmly on the money when it comes to a lot of different things. And yeah, I mean, the title of this space is How to Invest in Crypto Market Cycles, which I think is how, when people first read that, they're thinking, oh, invest as in put money in. But they don't think of, the broader term of investing, which is, like what you guys are saying, you can invest blood, sweat, and tears or sweat equity in, gaining assets and gaining basically, exposure to the crypto market. And that comes in a lot of different forms. And it doesn't just have to be, you have to put in, $100 and, invest in some coin. So Nifty, you got your hand up. What's up?
Yeah, man. So I jumped in kind of the middle of this, so maybe I missed most of what Task said, but I don't know. I'm kind of on the opposite end. When someone comes to me and asks how do I invest, I'm like, okay, cool. Well, the simplest thing you can do is use this centralized platform like Coinbase or Robinhood to set up a weekly buy or whatever. And that's usually where I point people. I don't say don't do it. I make sure they understand that whatever they're going to put in they could lose it, but I do encourage it because at the end of the day, the more people that use this stuff, the better it is for everybody. So obviously grandma's not going to be, buying $100 in Bitcoin a week on Coinbase, or maybe she is because it's easy, right? So I think that's the biggest thing. If somebody wants to get into crypto and they have no idea where to get started, they can start with, one of these easy to use platforms like Coinbase or Robinhood or PayPal, whichever one has auto crypto buys. And then they don't have to think about market cycles or any of that bullshit. They can just, dollar cost average on autopilot. And that's where I point people when they ask me about investing. And of course, there's the other side of it where you earn your crypto and maybe they are interested in that. But I think an easy place for anyone to get started would be that way.
Yeah, 100% agree. Eric, you got your hand up. What's up?
Yeah. So once these people are in, or once these people decide they want to go into crypto, the next thing I tell them, and I don't know, maybe this is where you wanted to steer the conversation to, but setting goals, it's probably the hardest thing that someone can do in crypto because we are greedy by nature. We want more. Whenever we see a 2x or a 5x or a 10x, we always think we can get more out of the equation and get more money, or we change the goals when we are in the middle of the bull market or the pump or just the price action in general. So the next thing that I would tell them would be set a goal, and you have to have the balls to stick to it, no matter how you see the price action or no matter how you're seeing the market behave. You have to say, okay, I invested $1,000 in this token, or I invested $1,000 in this coin. I am going to get out when I get 5 times that return or 2 times that return. Obviously, to set these goals, you must have done your research first. But once you know what's up with the coin, how big of a market cap it is, how the community is involved, et cetera, you have to set a goal. And then no matter if you see that the token or your financial analysis or your technical analysis is telling you that the token can still go up, crypto is volatile and crypto is not as predictable as traditional financial assets. So if you reach a goal, get out, and then when with a cold head, assess a new goal and a new investment plan. But don't change the plan in the middle of what you're doing.
Yeah, so we've been talking pretty, broadly and kind of at an esoteric level. But, if we were to take this conversation a little bit more tactical and, we're approaching the halfway point, so we'll kind of shift gears here a little bit. We've been talking about what we would do, or what we would advise, obviously not financial advice, but friendly advice to people who are kind of interested in the space and interested in getting into it. But let's talk a little bit more, from a tactical and like, you know, ground level perspective of how do we approach, in our own lives, the crypto space and investing in these crypto market cycles. I know from, having some experience with you guys on stage, that you guys have been in a few cycles, you guys have seen this space evolve and change over time. So, a big piece of this, a big takeaway from what we've been talking about so far for me is that, whether you're advising someone else or advising yourself, it's important to understand your audience, and your audience is either someone else or it's yourself. And you need to understand the goals and what that audience is looking for. So, Nifty mentioned that when he talks to someone who might be interested in crypto, he might tell them to go buy a little crypto on Coinbase just to experience it. Taskmaster talked about, having them go in and try to earn some crypto, or at least use a wallet and try to figure out, from a more, usable perspective. So I think it really matters what your audience, who your audience is and what they're looking for. But if we were to step back, look a little bit more tactical in our own, lives and how we approach the cycle, what do you guys feel? What are some of the main lessons you feel you've learned? What are some of the main, tools and tactics that have helped you in your crypto journey? And for this second part of the show, let's move it from like a formal roundtable to more, raise your hands, and when you've got a take, raise your hand, and then I'll call on you to give your take. So let's start with Bookerman. You got your hand up. What's up?
All right. So I personally have noticed and used the Bitcoin halvening to kind of historically time kind of my exit points. If you look back over time, anytime the halvening has occurred, a bull market has occurred thereafter for 12 to 15 months or so. So I always have used that as a way to sell and know when I want to start exiting. I also listen to a lot of news, and like when mainstream media is talking about crypto, it's a good time to get rid of some of your crypto. I am not one to say that you should buy all in or sell all out. I'm a big craps player, the gambling, the game, and I've always played that by, when I got some winnings, it would go over here on this side, and I don't touch that. That goes into my pocket. That is profits that are taken over time. But I don't, when things are going hot, I don't remove everything off the table. And even when things are going bad, I might still stay in with a little bit that I've been holding on to. So I think it all goes back to not selling all in, not buying all in, not selling all out. Pace that out over time. I like dollar cost averaging for buying and also selling. Just don't blow it all in the first get go. But I've always followed Bitcoin, thinking that everything kind of follows Bitcoin. I've historically always just followed the halvening cycles, and so I'm looking forward to a strong 2025. And if I'm right about this, I'm going to say it now, and you guys can give me a high five later. I think the top is coming Q3 2025. Don't listen to me. I'm a big dummy. Don't act on it. But that's just me saying it.
I love it. Yeah. So, I just want to give you a little follow-up question. When you are looking at these cycles, it sounds like you're looking at kind of the, more macro variables. But if you were to try to give a little bit more, tactical, like a very specific piece of advice, when you're looking at for the top, like you're saying, you think the top of the cycle is coming, what exactly are you looking for? Are you targeting a specific price in Bitcoin? Are you looking at, what stage of the cycle we're in terms of, actual like time being passed? What's your like hard line metric?
Momentum and volume. And so when you're just seeing like a ton of volume coming in, and it's coming in with high momentum, that can only stay going for so long. So once I see a bunch of volume start coming in, and it's really kind of has a bunch of momentum behind it, I'll start thinking about releasing the Kraken and getting rid of a few tokens here and there. But a lot of it goes on to volume, and it's always going back over. Like I wouldn't sell any of my Bitcoin until we're back over 60K again. For the simple fact that the next push I do believe is gonna, because historically, if you look back at all the different pushes, we're going back up above that. And so it's not necessarily a number. I kind of got my eye on the 100K mark for the simple fact that I feel like that's a big number that will have a lot of emotional value on investors and people coming in. And so but it's not really necessarily a number. It's more volume.
Cool. Yeah. So it seems like, you pick out like a big target number, and then obviously are looking at volume and where the market's swaying. I love it. Nifty, I see your hands up. What you got?
I just wanted to echo what Bookerman was saying. The biggest lesson I've learned in the long time that I've been in crypto is to take some profits, because you can get caught up in the hodl. Oh no, it's never going to go back down. But always take some profits, take some money off the table, put it into stable coins. Whatever you want to do with it, put it into HBD and savings, get that 20% APR, but take some profits, because you'll be real sad if you don't when everything comes back down and you're like, well, I could have had a decent amount of money, but I didn't sell. So it sounds obvious, but it's not. So take some profits.
100%. I think we've all heard the horror stories of, especially in the last cycle, where, NFTs were going crazy and altcoins were going crazy. I've heard plenty of people tell me that they were looking at their portfolio value and it was, mid six figures, even seven figures. And, they never took profits, and they just watched it, go all the way up to these crazy prices. And then they thought, you know what, it's going to keep going. I'm going to hold on. I'm going to hodl. I'm going to look for higher prices. But then they never sold anything. And then obviously the bear market hits, they start to see some lows, and, it sucks. I mean, it's almost worse to watch your portfolio go up, to some crazy valuation, and then watch it go down, as opposed to, never having experienced that ride at all. Watching it go down is a terrible feeling, and it definitely can screw with your emotions as well, both on the way up and on the way down. So yeah, I love your guys' statements about, dollar cost averaging, not being afraid to take some profits. It's okay to take some profits. It's okay to sell something. This is a big lesson I learned. Even if you're like, your target on something is like a 10x, and I'm pretty vocal that I invest heavily in Rune. My target for Rune is that it's going to hit $70 one day, which is a $25 billion market cap. So it's like a 25x from here. But does that mean that, when it's a 2x, or when it's up 20% or even 50%, does that mean I won't sell any because I'm just waiting for that long-term valuation? And that's not the case. For me, I'm willing to, dollar cost average in and dollar cost average out, take some profits on the way up, and not just wait for like this crazy number that I picked, basically out of my ass, which is what a lot of us do. I mean, we're looking at, Bitcoin going to 100K, or, some people talk about Bitcoin going to $1 million, or, Rune going to $70. We're all just picking these esoteric, random numbers subjectively. And whether or not we want to say that there's research behind it, it doesn't really matter. It's important to kind of have those systems in place to not let things get out of hand, and keep your head above water. I think it's easy to get caught up in the emotions. So dollar cost averaging in and dollar cost averaging out can kind of steady your emotions. Taskmaster, I saw you had your hand up and then lowered it. I don't know if you had anything to add on that front.
I didn't lower it, but The system did it for me, I guess. I mean, what people are saying about money management, I won't go into that because that's being covered good. And I agree with everything that's said. Know what type of investor or trader you are. Are you trading or are you investing? What are your long-term goals? What's your time horizon? If your time horizon, you need the money in 3 years, that's a lot different than 15 years. So good money management skills are very important. But one thing that I want to say that applies to crypto, and this goes back to what Eric said initially, with information, or more importantly, misinformation. It's been my observation. Don't buy into any of the crap Bitcoin maximalists say. And here's why. Crypto is risk on, risk off. When the sentiment is in markets in general is to take on risk, i.e. risk on, crypto will go up. When there's a flight to safety, when the sentiment within markets in general is to get away from risk, to go to
This space was downloaded via spacesdown.com. Visit to download your spaces today.
more conservative assets, it is not Bitcoin. It is into other assets, T-bills, it's into gold, it's into something, but it's not into crypto. And that's why we've had a major bear market, because what was proposed, crypto is a defense against inflation. Well, we had 40-year highs in the CPI, and what happened to Bitcoin? It went from 66 grand to 15 grand. That's no defense. So understand the cycles that you're dealing with, understand risk on, risk off, which gives you market sentiment. And then the other thing is understand where you are in the business cycle, because the more people and entities and central banks and ideologues and everybody tries to change the business cycle always holds firm. And after the business cycle peaks and starts to head down towards the trough, asset prices go down, which we're dealing with crypto assets. These are assets. They go down. And when you hit the trough, turn around, go the other way, guess what happens to asset prices? They go up. Whether it's real estate, whether it's stocks, whether it's crypto, it's going to follow the same cycle. So from a macro perspective, try to understand and figure out where you are. From a market sentiment perspective, overall markets, try to figure out where you are. And that'll help with everything else you're talking about, with the money management, with the Bitcoin halving, overlaying these different micro factors to try to determine where you're going to go with your investing.
Yeah, and I know that you're not necessarily a, trader day to day, taskmaster. You're more of a, builder, and like you said, in the space, earning and obviously a holder. But what do you look for, to bring it more tactically, on the ground? What are you looking for? And it can be anything, pricing, or even like Booker was saying, volume, or any other metrics. Are there any metrics you look for to kind of track that business cycle? What you were saying kind of reminds me of that famous, I don't even know if it was Warren Buffett or someone else, but Warren Buffett's famous for saying it, at least, buy when there's blood in the streets. Do you have any, tactics or metrics that you use to kind of track that cycle, or are you just kind of, following it from a more, bird's eye perspective?
Not anything in particular where I could give you 3 or 4 charts to go look at it. It's more a sentiment. It's more like you were saying, if there's blood in the streets, you have to have ranges, understanding you're never going to pick a bottom. Not usually. If you do, you're just lucky. You're never going to pick the top. So there's times to start scaling in. I don't give financial advice, but after what's been done to the crypto markets last 2 years, if you're involved in a couple different things, now may be a good time to start adding. We may not be at the bottom per se, but we're pretty damn close. There's not much more to go on the downside. I'm more of a believer. I don't believe in diversification. That does not lead to wealth. I believe you look for a few. I believe what Andrew Carnegie said. Put your eggs in one basket and watch it like a hawk. I remember in the ICO years, there was just people investing in 1,000 different projects, and I got 50 different ICO coins. And how can you follow all that? So I get involved in a couple different projects. I watch them like a hawk. I watch the development. The cycles, because I'm long term, the cycles are less important to me than somebody who has a much shorter time horizon. But that said, look at liquidity, look at the sentiment with liquidity in the markets, look at where asset capital is flowing to. If you see capital flowing into bonds, as an example, that's a sign. If you see capital, a lot of people going to cash, that's a sign that they're taking, they're moving out of the risk assets. Another thing, the final piece that I'll throw out here, crypto does tend to correlate well with high multiple tech stocks. So if Amazon, Facebook, Tesla, Microsoft, if they are getting slaughtered, you're in risk off. If they are doing well, then you might have a better chance of crypto doing well.
Yeah, love it. Eric, what you got?
Yeah, so we've been going around more theoretical approaches, and I just want to give my practical approach to things. So basically, what I do when I assess a project, I have been in the lookout for many microcap, like 20 million. No, sorry, I was just exercising, dude. Small market caps, or just like new projects. And the very first thing I do, and this is a sentiment around crypto Twitter right now. I look at the founder. I look what he's done in the past. If he's doxed, that's even better. And then I look at the community. If there's people that I know in the community, I kind of trust it a little bit more, because that means that I know these people and I know they do their own research. So I know this is not a scam, so to speak. But at the same time, this doesn't replace my own research. It just means that it adds a little bit more trust into the project. And then I can keep on going and putting in time into seeing if the and I call them projects because that's how we do it. But I don't really agree with this term, because a project has a beginning and an end. And I do like to believe that a lot of crypto companies are here to stay and are building for the long term. But that being said, it's about the founder and the community. The tokenomics are important, but they are easily replicable from other projects, and you can even just copy paste them. The foundations, as long as they are like the normal foundations of any crypto project, this is easy to establish. But you cannot buy a community. You cannot really architect a community. The community has to support you, and there's no other way of having an active and a loyal community other than actually putting in the man hours into it. That being said, there's one thing that a lot of us experience, and that's the sunk cost fallacy. When you have put in too much time or too much money into something and it goes down, or it seems like it's going down, or the project is dying, there's one thing is being loyal, and one thing is believing in the tech, in the founder, in the community, and another one is just going down with the ship. And you don't really want to do that. You don't really want to ride a wave down to zero. You have to know when to get out according to your own standards, and not think that just because you put in, 100 hours in community building, or in making connections, or in getting familiar with the project, or shielding the project, so to speak. And it doesn't matter if you put in $10,000 and you are holding $2,000. You have to know when to get out and avoid the sunk cost fallacy.
Absolutely, yeah, definitely echoing on the statements of kind of taking a step back and not being too emotional when you look at stuff like this. I mean, whether you're in any space of investing or crypto is just kind of an exponential version TradFi in a lot of different ways. So for this last, we got about 15 minutes left. I want to start taking some questions from the Threadcast. People have been dropping questions. I told them to leave as many questions as they can. And I'm also going to raffle off 1 free month of Leo Premium to one random person who asks a good question. So for the speakers, I'm going to start reading questions. And then if you guys want to tackle them, while I read the question, you don't even have to put your hand up. Just feel free to unmute and answer the question. And if two of you want to tackle it, then whoever goes first, just let them go, and then have your turn after. So the first great question I saw was kind of a two-parter. So IDK Samad kind of echoed on what Task was saying. Diversification makes sense when your size is size. You can't just make wealth if you're diversifying a $100 portfolio in 10 different altcoins. All you need is one high conviction play. Like Hive, it is greater, and I just keep dollar cost averaging into it. That's what he said. And the question comes from which kind of echoes on the same idea. Just Favor said, put your eggs in one basket and watch them like a hawk, or diversify your investment to avoid the spread of risk and increase your chance of success. I know Taskmaster, you kind of were talking about that. Do you want to tackle this one?
I can chip in while Task.
I got it. My thing was fighting me. The problem with the diversification idea is twofold. The first thing being, they say, well, it limits your downside. Okay, but it also limits your upside. And the key to wealth building is not limiting your upside. And when you look, and my conclusion on this is simply looking at like the billionaires, the Bloomberg Billionaires Index list. And you go through the top 100 there, most of them you can identify with a particular asset, or more importantly, a particular company. That's how they made their fortune. They didn't go in 60,000 different directions. And so while I know the common sentiment, especially among financial advisors, is diversify and spread the risk out, I got news for you. In the last 2 years, every crypto, I don't care how diversified you are, got killed. They got crushed. They're down 75 to 90% or worse. Diversification did nothing to protect you. What protected you was getting out somewhere near the top. Now, if you wrote it down and you're diversified, what are you doing? If you got Bitcoin and Ethereum and then 25 other tokens from, let's say, CoinMarketCap number 250 to 600, you're probably limiting your upside, because if you just go all in Bitcoin or Ethereum, they will probably have a greater alpha than all the others. You might catch a micro cap that just explodes. So when you're playing the percentages, I think you're better off if you put your eggs in one or two baskets. And the most I deal with hardcore is I have 3 or 4 tokens that I deal with. I might have a few others that I'm like, okay, who gives a shit if they 10x, 20x, wonderful. If not, I don't really care. There's not a lot in them. But I have 3 or 4 things that I have as core pillars, and I watch them very closely. And I mean, you know me from Hive. I got a couple projects on Hive and a couple tokens that I go after there. And that's about it.
Yeah, I think a key distinction should be made, and you were kind of getting at that, between, diversification within the same asset class and diversification, outside of the same asset class. Like, some people diversify by having stocks and bonds, but that's more of a wealth preservation technique than a wealth generation technique. So, yeah, definitely love the sentiment there. Cool Guy 222 asks, what's one advice we'd give to a newbie in crypto? We kind of talked about that at the beginning of the show. We kind of all went around the horn talking about that. So I'll let that kind of stand for itself. Andersino asked a question directly to me. Can Cal explain the tokenomics shortly with Rune and why it makes him bullish on it? this chain chatter is meant to be a little bit more broad than to talk about, specific cryptos or specific investments. But I'll just give you a very brief answer, and kind of overlay it to a broader thesis, which is, I think crypto has had a very big speculative boom. I don't think it's completely over. We've seen a few cycles of just pure speculation with no real, you see tokens that have, they 10x or 100x, and there's no real business underlying it. There's no real revenue. There's no PE ratio to track. So there's still, and in my opinion, that's not that day and age is not completely over. But we are starting to slowly trend towards more, fundamental value and looking for real value behind, a solid business model that's sustainable, not just crazy tokenomics and hype cycles. So for me, obviously Rune ticks a lot of those boxes by having, a good product market fit, having sustainable tokenomics, having revenue that comes in, which I guess is what you would define sustainable tokenomics as, is that, they're generating a lot of revenue from trading fees, and having a powerful community. So kind of like three big things I look for in any investment would be those things, and Rune ticks those boxes. So that's why I'm pretty bullish on it. But we could do a whole podcast session about Rune and why I like it. Uyabong asks, is it too late to invest in Leo? Asking for a friend. Again, we're not talking too much about specifics, so if anyone wants to quickly answer this, I'll leave it to any of our speakers.
Yeah, I mean, speaking from a personal perspective, I have been not dollar cost averaging, but I've been lump sum investing in Leo for about a year and a half. I still think it's a good buy. I'm still buying. I see a lot of upside, but I also have goals and I also have sell points. So it's not worth buying into any crypto without a plan. So before buying anything, make a plan and stick to it.
I'll answer that by saying I believe Leo is at some point, because many of us are trying to work to build it to that point by actually creating value. I think it's going to have a $150 million valuation at some point. So you look at the market cap now and do the math. I think it's still I just think it has a lot of upside.
Sweet. Yeah,
I would like to second that. And I would like to also say, the best time to buy a Leo is also when you pair it with buying your Woo token.
Love it. Yeah, I mean, I think it's, I think our positions are pretty clear. Being on this stage, I think we're all kind of aligned in certain ways. Mr. Hive001, what can you say about crypto winter and how does one utilize it for the better? Anyone want to take that? I'll start. Crypto winter, I feel like we kind of went through the depths of it so far. Obviously Bitcoin is 2x off the bottom of where it bottomed out. Back, when was that? Last November, or somewhere in that time frame. So, Bitcoin's basically 2x off the bottom. Will it go lower than that bottom? I don't think so. I think the worst of the crypto winter is over. That being said, I don't think we're in a full-blown bull market quite just yet. So if you're asking, how do you take advantage of it and use it for the better, I think a lot of it comes down to, many of the things we've already said, which is dollar cost average in. If you're, and even just to take a step back further from that is, first define what you mean by for the better. I think that's different for everybody. Some of us are looking for financial freedom. Some of us are looking for, a place to spend our time on the internet and care less about, the money. Some of us are looking for something to build. Others are looking, just to make a little extra income. There's 900 different ways to slice this, and really the first step is to define what you want before you can realize, what will allow you to make your life better or get you closer to your goals from the crypto winter. But just from my personal perspective, I spent this entire crypto winter, obviously building, but also, dollar cost averaging into crypto positions that I like, and I echo kind of from some of the stuff that Taskmaster said, which is, I don't own, my portfolio is not 20, 30, 40, altcoins. It's pretty much 3 to 5 major investments, at least in the crypto space. And the reason for that is because, I'm a firm believer in, fully understanding what you're investing in. And I don't think it's possible to have, 20, 30, 40 cryptos and be 100% caught up to them. So Itoro Bong said, what strategies can investors use to capitalize on the ups and downs of crypto market cycles? Which is kind of similar to the last question. If anyone wants to jump in at any point, let me know. But yeah, basically the same thing as the last question. Define your goals and then come up with a strategy that gets you to those goals. And for many people, I think that's going to look something like dollar cost averaging.
Yeah, and I just want to echo what you were saying, Carl. So if you really like, if your goal is to make it or to make enough money so that you can have financial stability or financial freedom, then never diversify. And this is not financial advice, but it kind of is. If you don't have enough money, make solid bets. It's like going to the casino and having only $50. If you just play blackjack, it's going to take you 10 years to get to $5,000. But you just go bet everything on the red. And if you double your investment, now you have double the powder to make more money. So if you don't have enough money, like if you don't have the knowledge or the money to be asking these kind of questions, just betting 1 or 2 tokens, do not diversify.
Absolutely. So I got 2 questions here that are, again, about something similar. Or Taskmaster, you got something?
Yeah, I just want to add something that you guys have mentioned a lot of times, the term dollar cost averaging. And I want to go back to what I initially said. If you're earning the tokens or earning the coins, you're dollar cost averaging at a price of 0 when you earn it. So that really helps your portfolio.
100%. Yeah. I mean, I think when you combine, especially when a token offers you the way, a way to earn it, it's almost like working at a, startup and earning a part of your salary as, stock options. So that's always kind of how I viewed things like Hive, which we're all familiar with. So yeah, I mean, I think earning is definitely an important thing to keep in mind. And obviously, like I keep saying, it depends on what your goals are. So if your goal is to, throw some money at something, sit back and watch it grow, that's completely different than, trying to build up your stake in something that you believe in long term and being willing to throw some sweat equity, either alongside some capital or even just sweat equity on its own. IDK Samad said, sometimes most of us try to catch every move on both sides, long and shorts. You think it's a smart choice to just go another way, get chopped, and miss the real move? What would you recommend? So, I just to kind of synthesize this, I think, I think the emotions of getting caught in the middle of things is really tough thing to deal with. So we kind of keep harping on dollar cost averaging, but I think it really is the answer in a lot of different situations. So personally, to not get caught up in upside and downside moves, I like to have targets and dollar cost average in and out. So like I said, my upward target on Rune, which is a big part of my portfolio, is $70 per Rune, and it's trading at like $3 right now. So that being said, my dollar cost average target is around $20, $25 is where I'll start to kind of slowly, very slowly sell a small percentage every single day to dollar cost average out. So it helps me stay less emotional. I think it's a great approach to the space after being in here for, I don't know, I think this is my third or fourth cycle. Mr. Hive, or sorry, Cool Guy 222 When do you think Bitcoin will reach $1 million? Anyone want to take this?
Yeah, I mean, it's not like whoever tells you a hard date, they are either a bozo or speaking out of their ass. Nobody can actually predict that. And if you think Bitcoin is going to get to $1 million, odds are that you are not going to buy the full Bitcoin or your goal right now. If you want to get there, you will have to sell by dips because it could be 10 years, it could be 1 year, it could be 50 years, it could be never. So anyone who says they know when Bitcoin is going to be $1 million, don't listen to them.
Well, with that said, I do know it's soon.
Yeah, I could give you
Love
that information, but it'll cost you 1 Bitcoin.
it. Love it. Yeah, I mean, this is the typical, trap of crypto influencers, is that they've, built their brands on trying to predict the market and try to tell people that they know something that everyone else doesn't. But I think, I'm obviously a big believer in efficient market theory, and nobody knows what's going to happen. And if you did know, you would have the ability to print money, and that is not an ability that anybody has, so far as we know. Let's see what we got here. A couple more questions, and then we'll jump off. We're pulling up on the hour. The time travelers asked, if you had a limited budget of $100, where and into what coins would you invest, and in what percentage for horizon of 1 to 2 years? I think we kind of covered this in a few different ways, but it's my opinion that you should pick a few things or even one thing. And we've kind of talked about how, especially if you have a limited budget, picking one thing that you understand really well is my opinion. That's how I would approach it. And that's what I've done in the past, with various investments like Bitcoin, even, back in the day, Steam, and then obviously Hive and Leo, and these different investments that I've taken have been things that I understand very deeply, and I don't go out and look for 10 different coins to throw $10 at each, which we've kind of talked about on air. It's important to kind of look at things at a more granular level and be really familiar with what you're doing, especially when you're at, I think that applies, all the way up the chain, but especially when you're at a small dollar figure, it's important to just, like Taskmaster said, put your eggs in one basket and watch it very closely. Because your goal is wealth generation. Your goal is not wealth preservation. You're not trying to preserve that $100. You're trying to grow it. So that's a very different approach than someone who's got, $100 million and they're just trying to preserve it and preserve their purchasing power over time. More questions about diversification. I feel like we've kind of hammered that topic in. I'm just going to look for one or two more questions, and then we'll jump out of here. What is the possibility from Uyobong? What is the possibility of anyone getting into the world's top 10 rich list from crypto earnings? Can such earnings be tracked? Taskmaster, you wanna take this one, since it's kind of about some of the things you've been talking about with earning crypto?
Yeah. No, you're not going to get to the top 10 richest people in the world list on earning crypto. Everybody who's in the top of the Bloomberg Billionaires Index came from business building. So you have to build a business. And could there be people in crypto who end up there? I mean, we've seen crypto billionaires. We've seen CZ, and I think the Winklevoss twins were there for a while, and maybe Vitalik. But, for the most part, if you want to get there, you're going to have to, it's going to come down to business building that's tied to crypto, which, believe it or not, is a tremendous opportunity, because I believe we'll use a stock term, the PE ratio, or the multiple, is going to be much greater with crypto because of the inclusiveness, because of the ability to distribute, and because of the ability to go global. So if you have a business that is tokenized and you have people all over the world looking to get involved, that I think is going to drive some of these projects to incredible market caps on these value capture tokens. And because of that, if you have a significant stake in it, well, then you simply do the math. And could that end up being in the hundreds of billions of dollars? You get a project that enters the trillions of dollars range, which some of these certainly can over the next 10 to 15 years, then maybe somebody is going to break into that small circle.
Yeah, absolutely. I think, and like we keep saying, define your goals and pick your approach based on those goals. I'm going to pick one more question. We got a couple of them, but I'll just have to pick one because we're running out of time here. See if I can find it. Lost it. Brando28. Do you guys believe an Ethereum killer will still emerge? I'll give my take first, and then if any of you guys want to jump in, and then we'll move to closing thoughts. So, people have been talking about an Ethereum killer since Ethereum was launched. I mean, it's kind of a funny, market sentiment that's always been around. Obviously, like I said, since day one of Ethereum. I think where there's value, everyone is going to be looking for a killer. There was a time when there was, all these Bitcoin killers coming out, and there were all the Bitcoin forks and, Bitcoin SV and Bitcoin Cash. And, people were talking about what if Bitcoin got overtaken by one of these other chains that forked off of it. And, there was the whole block size debate. I think that those kinds of discussions will always happen. I'm not opposed to like something with superior technology coming in and taking more market share, but I don't really look at things as being like a killer of something else. I look at things as being, if something superior comes out and it has the, potential to drive adoption and, build up its own market share in the space. I think that's overall a bullish thing. I'm a big proponent of obviously capitalism and people building good technology and competing over that. If you have a lack of competition, and you see this in, government agencies and organizations, when you have a lack of competition, there's a lack of innovation. So I'm a huge proponent of, bring it on. Like if there's a better platform than Inleo, if there's a better blockchain than Ethereum, if there's a better blockchain than Bitcoin, bring it on, and let's see what the best outcome is, because competition brings out the best in people or the worst in people. And in my opinion, that's just an overall positive thing for the market. So do I believe a Ethereum killer is coming? No, I don't really believe in killers. I believe more so in, maybe a superior blockchain comes out and starts taking market share. The thing about crypto, though, is that it's such a small subset of the broader global industry that, a blockchain superior to Ethereum could come out. And superior, obviously, can mean many different things. But let's just say a blockchain comes out that's superior in every single facet compared to Ethereum. I still think that the global stage is big enough that they both could grow. So that doesn't mean that Ethereum just suddenly dies. It just means that, the market grows and gains more adoption. So that's my take. Nifty, I see you got your hand up. What's up?
Yeah, I just wanted to echo what you said. No, I don't think there is an Ethereum killer coming. And I think that's become kind of a meme. The whole, Bitcoin killer, Ethereum killer. I think that's become more of a meme than anything, because it doesn't matter how good of a blockchain or whatever comes out. I mean, there's already better options than Ethereum out there. And it really doesn't matter what, just like you said, it's a global thing. There's room enough for more than one platform that does similar things. And just based off the amount of things that are built on top of Ethereum already, all these layer 2 scaling solutions for Ethereum and all these things that are tied so hard directly to it, I don't think that anything will ever replace it in that sense. But of course, there's better options out there. We could talk about them right now, but I don't think the killer thing is a serious thing. I think that's become more of a meme, at least in my opinion.
Yeah, my view on that is Ethereum will be fine. I've said for a long time Ethereum's going to be a banker chain. The bankers will end up taking over it. They'll They'll utilize it, they'll incorporate it, and that's what it'll be. In terms of permissionless, in terms of non KYC, that's up to debate. I go and I look at all of this stuff at the most fundamental of level from the database level. That's what a blockchain is. It's a database. That's what we're building, databases. We are looking to get away from the databases run by and the ledgers run by the banking industry. We're looking to get away from the databases of X, Facebook, YouTube. We're looking to get away from the databases of PayPal and these entities that own and control the data and are able to spin out now all these chatbots because they have, reams and reams worth of data that they're not obviously going to give access to anybody else to train on unless somebody else wants to pay a huge price for it. So my view is Ethereum will have its place. Ethereum will be just fine. I hold Ethereum tokens, and quite honestly, I'm not looking at selling them because I think long-term it's going to be a decent investment. But I think we have to go past the fundamental level. And when you come to the point of putting data into a database, this is where transaction fees arise. And this is where I think a lot of the blockchains and actually the industry in general is finding a problem, is because when you want to store data on a decentralized database, it costs you to store that data. Well, if it's pertinent data, okay, you don't mind, you don't care, you pay the transaction fee, not a big deal. But a lot of the data that's out there, like social media type data as an example, who's going to pay to store that? Nobody wants to pay to store that. And that's a quandary between Web 2 and Web 3. And I'll leave people to draw the conclusions where I think the bridge is there. But that's what I think is an important way to look at all of this stuff. And of course, when it comes to volume of data, I mean, we need a hell of a lot more capacity to get all of the data that's out there centralized to decentralized. To get even a smidgen of it decentralized, we're going to need a lot more data. So there is plenty of room in this game.
Absolutely, yeah, plenty of room. 100% agree with that. Bitcoin Man, you got your hand up, and then Booker Man, if you got any closing thoughts, or anyone else on this topic, and then we'll close it out.
All right, I just wanted to touch on what Taskmaster was talking about, and like how with blockchain you have to pay for data, but the reality is you always have to pay for data. You just don't necessarily see it, or someone else is paying for it. And like these Web 2 platforms, Facebook and whatever, they farm all this data and then leverage it to make money, which is like to be expected because it costs them money to store all this stuff, all your little pictures and all our messages and all this shit. So Web3 is really a great way to go about it because I'm here for the technology. I know we joked in the beginning of the space, but I'm here for the technology. But the reality is we have to think about how we can monetize as well, because that's the money runs on, right? So, and if we want to make something work, we have to think about the economics of it. So yeah, that's all I want to say. Great space so far, y'all.
Thank you. Yeah, thanks for coming on. Anyone else got any closing thoughts before we close this out?
I don't have any closing thoughts on what was said, other than I appreciate you guys having me. I think this has been a great discussion. We've had a lot of really great feedback back and forth, and I look forward to seeing more of these.
Thanks, Booker Man. Appreciate you coming out.
Yeah, I just wanted to, Kyle, thanks for inviting me. Thanks for putting this up. Yeah, I mean, pretty great opportunity to learn something every Wednesday at noon EST.
Yep. Awesome. Well, thanks everybody for coming out. Thanks to the speakers for joining us. I know it was also a little bit last minute, but we appreciate it. And like Eric was saying, we're going to start doing these every Wednesday. Chain Chatter is back. I took a bunch of questions from the audience and then also said that I would pick a random question asker to win 1 free month of Leo Premium. I already sent that HBD out to ahmadmanga, so thank you for the great questions. He asked a few awesome ones. Thanks everybody else who asked great questions, and I hope you guys enjoyed this first episode of Chain Chatter. I'm really happy with how it turned out. I think we had some great conversations and value adds to how to invest in the crypto market. We kind of covered a lot of different aspects of the space. So thanks everybody. We'll see you guys next Wednesday.
This space was downloaded via spacesdown.com. Visit to download your spaces today.